Greetings from all us at 5-Star Metals, and welcome to our new video series 5-Minute Fridays. The purpose of these videos will be to give you all the news information affecting oilfield and oilfield services that occurred this past week, the news that's most important to you. If you like this video, please subscribe to our YouTube channel to get notice of future videos and actually hit that like button. So without much further ado, let's just jump straight into this. U.S. economy got a lot of good news this week. The Purchasing Managers Index increased in March for new orders, which we had been concerned because there had been a dip, but it's back up. But I wanted to show you historically. Historically, we're at very high levels. So even a small dip is not something to get too terribly worried about. But what is concerning is business inventories. Business inventories appear to be rising, which may indicate that we're overproducing. So that's something we need to keep an eye on. U.S. unemployment looked great. We had 3.8% unemployment, which is very good. The economy had 196,000 jobs in March. And the stock market. The stock market had its biggest quarter gain in nearly a decade, so all of that's net positive. It also reversed the Treasury yield curve. Remember last week we talked about inversion of that yield curve. That curve has moved out of inversion, indicating less probability the U.S. would move into recession. That having been said, the U.S. economy is now at a 27% probability of entering a recession in the next 12 months. That is the highest it has been since July of 2007, so something to keep an eye on. China also seemed to do well. They had the biggest one-month improvement in their Purchasing Managers Index since March of 2012. But note Europe. Europe is not doing well. In fact, Europe posted its biggest monthly decline since 2012. Now let's move to our favorite topic, oil. President Trump again tweeted this week about oil, urging Saudi Arabia and OPEC to decrease oil prices. I've shown you a graph of when all Mr. Trump has tweeted. He seems to have particular ire when oil gets over 70 a barrel. But if you're just looking at that, according to the Wall Street Journal, you're only seeing half the story, because U.S. officials have been meeting with Saudi Arabia and others to discuss the impact of Iran and Venezuela sanctions and try and ensure stability in the oil markets. The big story this week that's moving is natural gas. We don't talk much about natural gas, but in effect, the United States production grew by 10 billion cubic feet a day last year, which is huge. It's about 11% increase from the prior year, and it's the largest annual growth in natural gas production we posted. But note that stocks inventory below ground is still relatively high. It's about 33% under the seasonally adjusted 5-year average. So as natural gas production has grown, so is exports. As you all know, I'm a big proponent of exporting energy, so I think that's wonderful for the economy. But the interesting thing is the price of natural gas. The price of natural gas has now moved negative at the Waha hub in West Texas. That means that drillers, producers are actually paying those with spare pipeline capacity to take the natural gas. I'm not sure what really accounts for that, but it's something to keep an eye on. Something for those of you that are interested in purchasing steel. This week, a United States court upheld Section 232 tariffs. I read the opinion as a lawyer. There's really nothing remarkable in there. It just simply said, yes, the president has the constitutional authority to impose these tariffs. But I would also note that the price of ore moved up about 7% last week. That's a fairly high jump. When I read the articles associated with it, it seems to all be concerns over natural disaster and production limitations. Venezuela is a little bit interesting right now. As you may remember, that the United States imposed sanctions on Venezuela in February, but they've been able to maintain their export capacity. Venezuela is still exporting about close to 1 million barrels a day, which is what they were pre-sanction. This week, the other big news is Saudi Arabia. Saudi Arabia issued a bond prospectus that required them to disclose a lot of things they've never disclosed before, chief of which was Saudi Aramco's earnings. If you look, Saudi Aramco has more earnings than Google and Apple combined. When you compare it to other oil companies, it dwarfs every other oil company. A couple of other interesting points in that report. Saudi Arabia's cost of extraction is about $7.50 a barrel. Also, its Guahar field that was thought capable of producing 5 million barrels is only actually capable of producing 3.8 million barrels. So they have less spare production capacity than we thought. So I also made news this week when it opened its first nuclear reactor. They're claiming it's for testing, educational, and research purposes. And they also threatened to delink the dollar from their oil exports, i.e. change the petrodollar relationship in response to the OPEC bill that we discussed last week. Hedge funds had a good week. They increased their net bullish position. So they've gone up a total of 421 million barrels over the last 11 weeks. That's all positive. Inventory data was unfortunately not so good. The U.S. inventory is built by about 2.9 million barrels. This is only problematic because there's a forecasted decrease of 425,000 barrels. The rig count went up. 15 more rigs were added for oil production this week, bringing the total oil rig count in North America to 831. And that is your 5-Minute Friday. If you like this video, please smash that like button, subscribe to our YouTube channel. As always, from all of us at 5 Star Metals, thank you for your friendship, thank you for your support, thank you for your business. Let us know if there's anything we can do for you. Take care.